1. Investments offered by Energise Africa are both high impact and high risk. As an Energise Africa investor, you can be confident of the positive impact that your investments will make on the planet and people's lives. At the same time, you should be aware that, from a financial point of view, these are high-risk investments. For example, the companies that issue bonds through Energise Africa are often in the early stages of their development. They may not yet be able to generate sufficient cash to succeed without additional funding. They operate in countries that may be more vulnerable than most to political or economic upheaval. 2. More specifically, if the business you invest in fails, you could lose all the money you have invested. If a business does fail, it is unlikely to have enough money or assets that can be sold to repay investors in full, if at all. So before deciding to invest, you should ask yourself whether you are prepared to lose all the money you have invested if something goes wrong. 3. Payments of interest and capital described in the offer document are not guaranteed. A company issuing a bond makes a commitment to pay interest and return capital on the timetable set out in the offer document. However, that does not mean that these payments are guaranteed. The company's ability to pay will depend on its performance and financial position. 4. These investments are for a fixed term. Do take note of the timetable for repayments as described in the offer document. The company issuing a bond will not make repayments any sooner than planned. Energise Africa does not offer any facility for you to sell your bond to another investor. 5. An IFISA can provide a tax benefit, but not any sort of protection from losses. Innovative Finance ISA, or IFISA, is the name for the type of ISA account that can be used to hold bonds, offered by Energise Africa. Please note that the IFISA does not provide any protection from losses. It simply means that returns from investments held in an IFISA account will be tax-free. 6. The Financial Services Compensation Scheme does not protect from losses made on investments. You may be aware of the Financial Services Compensation Scheme. It is important to be clear that this scheme does not cover poor investment performance. 7. Make an informed decision. Before investing, it is worth making sure you have the information you need to decide whether an investment is appropriate for you. This includes reading the full offer document, as well as other information available about the company, project, and related risks. 8. Avoid putting all of your eggs in one basket. All investments carry some form of risk, alongside potential gains. A good way to manage those risks is to build a portfolio of different types of investments designed to provide a balance of risk and reward that fits your circumstances. A sensible rule of thumb is to limit any holdings of high-risk investments, including bonds offered by Energise Africa, to no more than 10% of your total portfolio. 9. Next steps. Click Complete Account. When you feel ready, please click on the Complete Account button. This will take you to a brief set of multiple-choice questions to show that you understand and accept the risks that go alongside investing in the impactful projects offered by Energise Africa.